What's up guys, it's Michael here. In this video, we're gonna cover the topic is whether or not the housing crisis currently now is going to now go the other way. Meaning, has it hit its bubble, or has it hit a recession, or is it still continue to go up? So I've been dealing with real estate for the past year as a real estate agent, and I am here to tell you that currently we finally hit nearly the top, but it hasn't popped. So if you guys like more videos like these, please click the like button down below and a subscribe button, and we'll get back right into it. So a lot of videos are now coming out, even the mainstream media, saying that the housing market has finally popped. And based on my understanding is, I believe it's getting close to the peak, because thanks to inflation, now the inflation rate is like 9 something percent, and also the borrowing rate, the interest rate is around 7% now. So they're going to raise it up until they try to curb it. This includes for everything: taxes, food, any necessities and items are gonna raise in price, and they're trying to bring it down. But how does this relate to real estate? So during the pandemic, everyone saw an opportunity because they tried to treat it back like to 2008. But now, come think about it, over a decade, a lot more people are now way more wealthy. They're way more millionaires than back, say, in 1980 compared to now in the 2000s, because thanks to the tech bubble and the internet age, a lot more people are more wealthy. There are a lot of other countries people bring money in. So now, finally, the housing market has hit the top, but has it popped? Now, based on my understanding, right now I currently have a few properties I'm working with partners are being listed, and seeing how the offers come in and how the pricing is currently not as crazy as before, where like you get a property or have for list, you get over 30 offers for that one property. Now instead of 30 offers, you're getting around approximately around the area in Southern California. I'm looking between 5 to 10, sometimes more than 10, but it's around that number. And sometimes hit double digits depending on the area, sometimes it hits single digits, but it's not like you usually get 1 or 2. But now it's still like around the 5 range, which is still way better than before. So a brief recap on the housing market overall in the United States, especially for California. So during the pandemic, everyone decided to work at home, stay at home, everyone work at home. So everyone moved out of major cities, especially the tech cities like California and New York, and they moved to more or less expensive cities like Nevada, or in Las Vegas, Texas, Austin, somewhere near the water, Florida, near Miami or Tampa. Anywhere the tech hubs, or even Tennessee, anywhere low tax states, that's where they're targeting, because they can work more remotely and businesses are finding better opportunities over there. So for real estate over there, it went up because more people, meaning more people to buy houses, population, and everything included. So housing prices go up because low in inventory, supply and demand. So how's it do with the bubble currently right now? The situation right now is currently stagnating. So how do you tell if housing prices go down? So the main key takeaway, which I want you guys all to take away from this video, is how are prices dictated in houses? How do you know what is the price of your house? So what you think of is you look at your property and you do something called a CMA. A CMA in real estate is called comparative market analysis. So what it does is it takes your property, and your property is right in the center, and you imagine a circle around your house. So right in the middle, a circle. And when you imagine that circle, that 1 mile radius is any home that is comparable to your property that has been sold within the past or whatever specific date. Usually it's about whatever dates you want to put, 180 days, 1 year. And keep that in mind, this is like a comparative analysis, but it doesn't include a lot of factors. So for example, your house you bought in, let's say, somewhere in Southern California, Beverly Hills, was for like $1 million back in the year 2000. Now you're selling it now, and you found out your CMA for a property when you spoke with your realtor, it's around like $7 to $8 million. And the question is, how did the price of your house went up by so much? So that's a real question. It's like back in 2008, too many people bought houses, too many people took loans, and everyone defaulted. A crap ton of people defaulted. That's why they call it the housing bubble or the housing crisis. In this case, a lot of loan brokers and loan mortgages are way more careful, and thanks to federal regulation, now they're being way more careful on who can take money and who can basically lend money out to whatever specific people who are qualified. And apparently there are way more qualified people than back in 2008. So when you do the analysis to the property, how do you know whatever your price it is besides that 1 mile radius? So right now, so you look at your neighbors within a 1 mile radius. If they sell their house for whatever specific price, that will actually raise the price of your home. So for example, your house you bought like in Beverly Hills, let's say for $1 million, and your neighbor decided to buy a house later on, which is right next to you, for let's say $10 million. Then within your 1 mile radius, your house value just went up. If it's comparable to your neighbors, your value just literally went up. So more people buy houses within your 1 mile radius neighborhood, which most people take is usually 1 mile. Some people take like 5 if you can't find houses nearby. For example, if you live in like Wyoming, Nebraska, then it'll be a lot more difficult to do a CMA. And you look at other different things. So you look at lot size, price per square footage. There are a lot of other ways to dictate what you're going to list your property for, but CMA is one of the main ones that majority of people use. So, but you got to realize that when you look at the housing crisis and the housing bubble has a pop or not, first, besides looking at price, you look at how many offers that every seller and whoever's selling a property, you gotta look how many offers they get. As much as before, right now it's still more than back in 2019 pre-pandemic levels, but it has definitely slowed down. It hasn't popped yet, but definitely slowed down. But what makes it interesting when you do the CMA, you look at it, even your property value has gone down a little bit. It's still worth way more compared to like 2019 pre-pandemic. So during the pandemic and going to right now, it's still worth way more back then. You can say like, oh, it's slowing down, maybe you should sell your house. But you gotta think about it when you sell your house, where you're gonna move to. Because right now the rental market is extremely hot and that will not be going away anytime soon. That I believe that has not popped yet because all the people who sold their homes, they need somewhere to stay and they can't fight with the current market. So right now, where it used to be a seller's market and now it's brought back down, where the buyer is now meeting level. The supply and demand are getting close to equal, where the buyer meets with the seller. So they're around even out right now, getting close. Whether the housing will drop or not is really up to a lot of factors that I cannot discuss in always one video. Like for example, in California, we have a housing shortage. We're supposed to build about 180,000 houses a year, and we only built around, for the pandemic phase, probably like less than 28,000, and before it was already less than around the 20K area, and it's been going lower and lower and lower. So you know, that's at that point there's nothing much can be done for people like us, but that has to be mandated by the government by moving on more subsidies and contracts, or maybe people designing, like architects, probably the ones that make it more profitable. Maybe government needs to step in, make it more profitable for them to build low-income housing. There's a lot of things that go into it. As your housing property, would your price value of your property go down a lot? In my opinion, if it's based in California, it will not. Because even if it does go down, since the area, because housing, how price is dictated is based on location. Mainly is location of your property. If the location of your property is worth a lot, for example, if you live near the beach and you're up on like a little hill, then your property is worth way more money compared to someone who's living in like inland, where this is either super hot, super cold. So you think about the factor of housing is location. If your location's like value's worth a lot, like Beverly Hills, anywhere near the beach, like San Diego, anywhere like literally on the beach, and it's worth way more compared to inland. And the housing where people is, if it's scarcity too, you gotta look at it. How many people are willing to list their property and how many people are willing to put offers in. And now since the interest rate is raising up, hard to get loans, right now we're about the tipping point. But I believe it will not tip anytime soon, because you think about it, there's many other factors in play, as I mentioned. Besides location, CMA, you got external factors you cannot control. For example, the war in Ukraine, that's affecting how people think and how people invest. So as overall takeaway of this video, has the housing crisis finally popped? No, but it's about to be leveled out. Right now, the seller will not have as much power as before, and the buyer, it can finally be even out. But keep that in mind, all those people renting are still looking for a home. So it could go back the other way again, where a lot of buyers come back in again, maybe see an opportunity. And that's all I gotta take for this video. I hope you guys like this video. Please like, share, and subscribe. And I'll keep you guys updated on the housing crisis currently that's going on. Pretty soon, I'll say within probably around 2023, maybe you might see the houses start to dip a little in California, around other states, I'm not sure because I have to take a look at those areas. But housing in general, land is scarce and building houses is scarce. So if it does dip, it wouldn't dip a lot because, like, for example, like I said, to make your property not worth a lot, those people around your 1 mile radius has to sell their house below whatever market value. If they sell it below their market value, and that means your value of your home will go down too, which most of the time will be not a lot, let's be honest. So most people buying those nice neighborhoods, they usually will not be moving.